there's a lot of deals out there that are really overpriced that people overlook. And as time goes on, sellers get motivated. And I'm always there to make an offer, and I just leave it and see what happens. And it's come back to me a lot. I mean, you got to shoot a lot of shots in order to get a good deal. And even if you aren't finding off-market properties, you can find really good on-market deals.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Well, we're all trying to find a good deal, right? What does that mean? A good opportunity for you or I, or man, it could be so many different things. Well, our guest today, Jason Lee, breaks that down and what that means for him. He's a broker. He's done big things. He owns lots of real estate personally. He's highly recognized real estate agent in the multifamily real estate industry. He's worked with multiple to 10-figure real estate investors in San Diego County, helping them acquire, sell, and 1031 exchange to improve their portfolios. Transactions have been featured in the San Diego Business Journal, Costar, and The Real Deal. He's also a real estate investor, has personally acquired over 25 properties in just a few years, now owns over 100 units in San Diego, totaling over $50 million. So he is out there making it happen, and he shares some real steps for you today to find some deals. I just appreciated his transparency, how he laid out exactly what they're doing. Say, hey, this is, these people are calling. These are the people who are more likely to sell because of this or because of that. And these are also the people that you need to be building relationships with to find deals. So Jason just laid it right out there. I know you're going to learn a lot from him today. Jason, welcome to the show. Honored to have you. Looking forward to getting to meet you and learn more about you. But man, you've been moving and shaking, making some things happen. And I want to know just how you did that. I know the listeners do as well. But man, why real estate for you? And what'd you do before real estate?
Yeah, Whitney, thanks for having me. Honored to be here. It's a great question. Why real estate? Honestly, growing up, no one in my family was in real estate. No one was in business, honestly. Up until I got to college at San Diego State University, my parents, my whole life, they said, you're either going to be a doctor or some sort of engineer. Typical Asian parents, right? And when I got to college 3 years in, I just hit a breaking point. I just thought there's no way I can go to grad school. I don't want to be in school until I'm 30. So I just wanted to find a different path. And I talked to all my friends who were in business, people in my fraternity, people in other groups that I was in. And the most successful families, they either own rental properties or they were directly in real estate in some way. So I went to go try it out and started interning at a company in San Diego. And then the rest was history because I ended up loving it. I ended up loving every single day to day and all the activities involved, the competitive spirit you need to succeed. So I just really fell into a great career that I turned into my life.
That's incredible. That was a big change of plans there, right? Probably for your family too, right? Your parents are probably like, wait a minute, what's happened? All right. I would assume. Did they question you at all? How did you say, hey, Dad, I feel like this is what I should do instead of becoming a doctor or engineer? How did that go?
That conversation was very tough to have because they were very strict on me. So I honestly didn't even tell them for like 3 or 4 months when I changed my major and started doing different things because I knew it was gonna be a bad conversation. And once it was time to confront them when I came home from school, they tried to threaten me to take me out of school. They threatened me to basically said that I wasted my time and to get a real job. So yeah, they were not fond of it. But now, they're very happy because I come from a lower to middle class family. And the whole reason why I wanted to make a lot of money and do big things was to give back to my mom who didn't have the same opportunities in America like I did. So because of her language barrier. So now it's come full circle. I bought her a property down here in San Diego, an investment property that cash flows every single month for her, and gifted her well over $100,000 for Christmas. And I also paid for my little brother's tuition at UC Berkeley. He's 21 years old. So my dream has come true, but now I'm trying to do bigger things like educate more people on how to get into real estate and the amazing benefits that it really offers.
Wow, that's incredible. I appreciate you being so transparent about that transition and the difficulties, right? And sharing that with your family, but now, the success and pushing through that, and even the way you're caring for your family like that. I hope it encourages the listeners, and myself to do the same. But you said though that you discovered that the most successful families own real estate, right? I think
Mhm.
that's a pretty cool discovery, right? To observe that and think, wait a minute, like maybe I should consider this, in my own life. But then I mean, did you drop out then of grad school, or you just didn't do grad school? And then you said, hey, I'm going to go do an internship to learn more.
Yeah, so I got my bachelor's, but during my third year of getting my bachelor's degree, that's when I changed courses and I was interning full time. Didn't really care about school at all, but I still got my degree just to get it because I was almost done.
Yeah.
But I was a full-time commercial real estate agent specializing in multifamily properties here in San Diego for about 18 months when I was still in school. So I got an early start to it and I closed a couple deals before graduating because, as you know, Whitney, in real estate, you eat what you kill. If you're not doing deals, you're not making any money. So I had a little bit of a nest egg before I actually graduated and went into full-time brokerage.
Yeah, good for you. Well, I just it's great for many of the listeners to just hear how you stuck that out and pushed through, right? Even the big decision change for your schooling and path, what your family thought, was going to be your path as well, and but you didn't quit. Even the internship, I think, man, it's a great step for most, right? In to learn, right, and to get into the business, and to build, even have people that are helping you then to learn, that have been there and done that. But I want to dive in now to, because you've done a lot since then, and you have, I mean, you've really grown your own portfolio now, and you've become really good at acquiring and deals, right, or finding good opportunities. And so I want to dive in on that, and maybe that comes from some your being a realtor, experience. But maybe you can help us with that, because I know right now many of the listeners are struggling to find deals, right? Struggling to find properties that make sense. So let's jump in there a little bit. Share with us a little bit about what is a good opportunity. When you say a good opportunity, what does that mean to you? And then let's talk about how you're finding them.
Yeah, so a good opportunity to me means that if I buy the property, there's a clear path for me to make money within the first year. So I'm not betting on appreciation. I'm not betting on the market going up or down. I know that if I buy a property for X, it'll be worth Y if I do a certain amount of work or add a certain amount of value to the property. I think a great deal for me, a great threshold that I look at is I want to be about 65 to 70% below the aftermarket value. That's like a very easy little metric that I use that's always worked out for me. But I go into the deeper underwriting once I pass that little test of the 70% of, or the 30% below ARV after repair value. But a lot of my properties that I've really made a lot of money in, it's been small to medium sized apartments dealing with mom and pop owners. So like most of my deals have been 4 to 20 unit properties. And the reason why I like this space so much is because there's a lot less competition. If you go 100 to 200 units, you're dealing with the bigger institutions that have a lot more capital than you, that have a lot more employees and wherewithal to perform on a deal. So it gets tough to find good deals at that point because there's a lot of people looking at it, and those deals usually go to market because the sellers are a lot more sophisticated. So I've been able to find some really good properties in the mom and pop kind of private client range right below institutional.
Yeah, no, that makes a ton of sense. How are you finding them?
Yeah, so I own a brokerage here in San Diego, so some of the deals, not all, but a good amount have been just through my team getting on the phones and finding off market properties. But honestly, a lot of the deals that I purchased have also been like 6 or 7 deals that I bought were just mismarketed on the MLS or Costar. So there's a lot of deals out there that are really overpriced that people overlook. And as time goes on, sellers get motivated. And I'm always there to make an offer, and I just leave it and see what happens. And it's come back to me a lot. I mean, you got to shoot a lot of shots in order to get a good deal. And even if you aren't finding off-market properties, you can find really good on-market deals. And I've seen it happen with me, my friends, the people that I've coached. So it's definitely possible. But honestly, I think you got to have a mixed method. You got to have the on-market strategy and the off-market strategy. And for a typical listener that's watching the show who isn't a broker, the best way to get off-market deals is to hang around people that are actively talking to sellers. So that's, of course, brokers, that's bankers, loan brokers, property managers. I've gotten deals from all four of these different providers. Trust attorneys is a really good one if you have any trust attorneys that you know. So you want to hang around people who are that hang with potential sellers. So that's how I've been able to source a lot of opportunities, even in a tight market like today.
Yeah, that's some great advice. And I appreciate you even listed a number of potential connections there that should be made. But hang around people that are actively talking to those owners, sellers, right? And then they make a connection, I'm sure, if they know you're a buyer, right? Eventually at some point. You talked about, your team helping you find deals and then mismarketed deals on the MLS. I think that's interesting. With something that triggered that, you also talked about properties being on there a long time, right? And being willing to make an offer. But maybe some that's been on there a long time, it is because they're mismarketed as well. Is that right?
Yeah, they're either mismarketed, some have like no photos, or it's like a Google Maps photo, or just grossly overpriced. Yeah, one of the two.
Yeah. Yeah. What are, I guess, what are some other ways or unique ways that you're pushing that, even, or maybe the ways that your team is finding people that they're calling, or what are some steps that you're maybe giving your team to say, hey, focus on these lists or these people, or I don't know, some criteria?
Yeah, so we focus on anything. Me personally, I focus on any properties in Southern California that are small to medium-sized multifamily. So we typically call owners that are under 50 units. And honestly, we call like every owner because no matter what, someone might be a seller. So we kind of don't have like a specific criteria that we go off of, just like the unit count. And honestly, how long they've owned the property is a good one. If they've owned the property for over 10 years, they're more likely to be a seller at a decent price versus someone who bought the deal a year ago and is looking to flip it. So that helps too, how long they've owned it, how old the owner is. If they're older, if they're in their 70s or 80s and they're in their late retirement, maybe they're sick of managing their own properties. You'd be surprised how many 70 to 80-year-old owners I meet with who still manage their own property. It's pretty hilarious. In the mom and pop space, they just don't want to pay any sort of management fee to a property manager. So those are some great ways to find some off-market deals as well. And even if you're not an agent, you can tell your agent or broker to call these lists, and you can easily find them by talking to a local title officer or the title officer in your market that specializes where you want to go. If you live in Arizona and you buy in Texas, you can deal with the title officer there, and they can pull lists pretty easily based on the criteria you're looking for.
Yeah. Wow. Okay. Well, staying in this same thought as far as finding these good opportunities, what about, on market now or working with brokers and give us some tips there, right? To see those off market, quote, off market deals, when working with a broker.
Yeah, you said on market deals with a broker?
Yeah, either or. But yeah, give us just some tips on working with a broker, building that relationship so you're seeing those deals.
Yeah, I think what most people struggle with is when you're first getting started and you don't have a track record, it's tough to make a broker want to basically trust you to close a deal. The only thing a broker cares about is, are you going to close, right? Because me being a broker myself, having done almost 150 transactions, I've had a lot of properties cancel. Like 25% of my deals don't close. And I'm telling you, the 25% of those transactions that didn't close, I'm probably never sending a deal to those buyers ever again because they don't perform, they don't do what they say. It's just not a good working relationship. So, a great way to kind of fast track that is to honestly partner with an experienced operator or experienced partners and just show the broker that you have a lot of capital available. If you're starting by yourself, honestly, if I'd highly recommend starting smaller because properties in the smaller space, like 4 to 20 units, Brokers don't really care if you have a ton of money. If you have enough money to buy the property with you and maybe your family, that's totally fine. But you just want to be specific that you have the funds to close, and you want to be specific on what you're looking for, because I'm telling you right now, the people who are the most specific are the ones who see the deals first from me and my team. Because if you say, I'm looking for any good deal in all of San Diego County, versus someone who says, I'm looking for a 5 to 10 unit property in this range, in this location, for this cap rate or this return, it's a lot easier for me to think about that person when I find a property. So when you're first starting and you don't have a track record, it's really good to be specific as you can in order to make that broker think of your criteria first when they find a new deal on or off market.
Yeah, for sure. What about people who are syndicating, and they don't have the funds raised yet, or how do we prove credibility, I guess, to somebody like yourself so we can see the deals also?
Yeah, I mean, for a first-time syndicator, I've worked with a lot of first-time syndicators. I've sent good deals to a lot of first-time syndicators. It really just goes back to having showing the broker confidence that you're willing to do a deal, even if you don't have the funds raised yet. If you show me that you're competent, if you actively respond to my emails, the deals that I'm sending you, if you're calling me, if you're proactive, showing me that you're actually looking to really hunt for a deal, I'm going to keep sending you stuff. And a lot of brokers want to give first time syndicators a shot, or first time investors a shot, because the smart brokers understand that if you create that working relationship for a first time buyer, they're probably going to be a lot more loyal to you versus other brokers, because you built that relationship first and you taught that person a lot when they were first getting started. And the first time syndicators I worked with are now some of my best clients. So I think if you're a first time buyer and you haven't raised funds yet and you're bringing into the space, you still have a shot. You just got to be a little more proactive. You got to be touching brokers a little more than others. The big players that are in your market, I promise you, they're not reaching out to brokers as actively as you think. So just be proactive, show them that you're hungry, show them that you have the ability to close and that you're competent so that you can get it done.
Speak to some of the challenges you see right now for not only multifamily investors, but also for the brokers as well in our space.
Yeah, some challenges I'm seeing in multiple markets. I mean, there's just not a lot of inventory in the markets that I'm in. So the market's very tight, not a lot of deals. But the thing is, there's also a lot less buyers. So if you are a first time or a newer buyer, it is a really great time to get in the market and find a good property. I've seen some of the best deals happen this year. But that being said, overall volume is really low where I am. So a lot of brokers are retiring. A lot of younger people are getting flushed out of the market. But on the other end, for investors, some challenges they're seeing is a lot of investors who aren't being proactive, who aren't really actively looking for properties. They're not really seeing anything good, because the best buyers were still very actively buying a deal a month in my market. They're actively reaching out to me, reaching out to the other top brokers in our market, and they're still finding good deals. So there are challenges in the market today because there's a lot of tightening. And of course, the cost of capital is very tough right now. Rates are still going up. A lot of banks don't have a lot of liquidity. And a lot of people are in the wait and see game. A lot of people are seeing waiting and see what happens. And when these kind of markets happen, it's very tough for brokers to make money. It's very tough for the average investor to make money. So you have to be unique and have some sort of special value add if you want to make it in markets like this that are tight and kind of staying still.
Jason, I ask everybody this, especially with the experience like you have. But I'd love to know your thoughts on the next 6, 12, 18 months and what we should be doing. Or just as your buyer as well, how you're thinking about the next 6, 12, 18 months, how that's affecting what you're doing, right? As I always say on the show, whether we have a crystal ball or not, which none of us do, still what you think affects whether we're buying or selling or what we're doing. And what are your thoughts on that and how it's affecting what you're doing?
Yeah, after my take, I'd be interested in hearing your take too. But honestly, I think real estate's very it's very hyper local. Some markets,
Sure.
if you compare San Diego to Phoenix versus Las Vegas versus Florida, they're all getting hit differently. Personally, in my market, we're not seeing a lot of pain. A lot of owners have so much equity from the huge run up, and not a lot of people have bad debt here, and not a lot of people are over leveraged. But other markets are different. I mean, I'm a limited partner in some other markets in the Midwest, and I know syndicators who are struggling. I have friends who are limited partners, and the sponsors asking for huge capital calls, or they're saying that their pref is going away, which sounds like lawsuit central to me. So a lot of people are struggling, but I think that in the next 6 to 12 months, I do think that a lot of people will get used to the newer rates. I think people are just spoiled from 2021, 2020, looking at 2 to 3% interest rates, and people are already starting to get used to the norm. And we are going to see some pain out there for sure, and more than other markets than some like mine. But I think if you're watching the show, you really have to actively be sharpening your pencil, looking for opportunities, because there are always opportunities, and there might be more in the horizon than other markets. So I think the one tip I want to leave off with is just keep analyzing deals. Don't stop. Don't get discouraged, because it only takes one to change your life. So just keep
Good or
underwriting.
bad, right?
Yeah,
Good or bad. Yeah, yeah, I agree. You have to be consistently looking at deals, or you don't know what a deal is when you see it, right?
exactly.
Yeah, I agree. We did, I think, one deal last year, and that's really, really slow for us. But then looking back now, I mean, in the moment, I'm thinking, what are we doing? Why can't we find anything? We underwrote more deals last year than we have since we started. And so it grew our team, and like I said, just looking at more and more deals. But looking back now, I'm thankful we didn't buy the deals that we didn't buy. But we're continuing to look and continuing to, we have some, yeah, I have something under contract now, but anyway, what about, when you're looking at an asset now, how do you ensure that you're prepared for some type of downturn? Whether we think there's going to be one or not, even if the market's going up, I still want to be prepared for something we don't expect, right? And what does that look like to you? I know everybody says be conservative. What does that mean? And so just share a little bit about how, hey, I when you're finding a deal, I trust this deal, I know this deal, that it's going to do well, even if there's something I don't expect. What does that mean to you?
Yeah, I think it's very hard to lose in multifamily real estate or any commercial real estate asset that yields a high return or has a path to a high return. So what I mean by that is, if the cash on cash return, if the cash flow is, well exceeds your mortgage payments, then it's gonna be very hard to lose on that property. So if you have a clear path to cash flow, or the property cash flows a lot day one, and you're in a great market, so if you're in a great location, I think in markets like this, a lot of my most intelligent investors that I work with who own over 5,000 units, they're only looking in solid locations right now, not in the class C to D locations. It's kind of called like the flight to quality, they're calling it. So that's one thing you should look at, because even in tough times, if you're looking at a B minus, A minus market, those sectors don't only get hit as much in bad times. So you're always going to have good tenants who aren't big headaches, who pay rent on time, who are young to middle-aged professionals. So that's a great space to be in, a great asset to own. So that's one thing you should look at. And then also, the reason why so many people are losing, or not so many people, but why I know people losing on properties or not making good returns, because they projected such a low interest rate, low cost of debt. So I know some people that are still betting on rates coming down, and they're underwriting 4 to 5% rates on their exits. And I'm like, what are you doing? I think you should be keeping that same interest rate or raising a little more for your exit. So, even if the rates stay the same or go up, you're still going to do well. So I think you can't predict the future. So you have to use today's rents, today's interest rates, or pad it even more by raising it. And if you do that and the deal still makes sense and it pencils, then it's going to be very, very hard to lose.
What are some, shifting gears just a little bit, Jason, to a few final questions. What's some of the most important metrics that you track? And that could be personally or professionally, anywhere in between.
Personally, for my day-to-day basis, I like to track how many people I talk to in a day. So I want to try to talk to at least 20 to 25 people a day. Some people that are in my industry, not just random family members or friends, but people that are in business. So that's something I've tracked for a long time, and it's really helped me a lot in my business for my brokerage and investment business. And then something that I track in regards to a real estate deal, I really love the GRM, the gross rent multiplier, because unlike a cap rate, you can't really tweak a GRM. When you look at an offering memorandum for a broker, a lot of the cap rates are skewed because a lot of brokers out there, they don't know the actual cost it takes to operate a property every single year. So a 5 cap might actually be a 4 cap, or a 7 cap might actually be a 5 cap because they didn't put in the property taxes correctly, or their maintenance costs are way too low. So I like looking at GRM when I look at a deal. So if the average GRM in my area is going for 13 to 14, if I'm buying a 10 to 11 GRM, I know I'm buying a pretty decent deal. So it's very hard to skew the actual rents on a property. So, or lie about it or try to tweak it. So I like GRM when I see deals.
Awesome. What about some habits that you are disciplined about that have produced the highest return for you, other than calling, which I think is impressive, or speaking to 20 to 25 people a day?
Another habit that's really helped lead to my success, I think you got to do something every single day that you enjoy. So if you're in, I know a lot of people say you got to have a great morning routine or you got to have a great whatever, but we're humans and sometimes we hit the snooze button. Sometimes we have bad mornings, but every single day I've been religious to do something that I enjoy every single day. And whether that's in your career or not, that's really helped me create a great, like, a positive mentality for my day. I'm lucky enough to love a lot of the things that are involved in real estate, but there's some things I don't like. And a lot of people that are successful, they like to delegate the tasks they don't like as much. So I think a habit of trying to do as many things that I actually enjoy doing every single day in and outside of work has really helped lead to my success in my mental health.
Yeah, good for you. How do you like to give back?
Great question. I like to give back with being generous to the people I love. So whether it's family or friends, whether it's, paying for my friend's dinner, paying for my team's dinner, taking them out, having a good time, or taking my family to a vacation. That's all stuff I like to give back to the ones I love. But it's the people who are less fortunate. I really like to give back to I'm really passionate about trying to help the homeless here in San Diego. It's a huge problem. So I like to give back to helping them, volunteering, and then also donating money to some shelters as well. And then I'm also really passionate about animal shelters. So I'm a huge dog person, and I have 2 amazing dogs here that I rescued from an amazing facility in San Diego. I like to give back to them as well. But overall, that's something I need to do more. And then creating like free YouTube videos, creating free content, that's a way to give back, because I never would have learned the stuff I know now without getting lucky and being under such great mentors. And not a lot of people have that access. So it's good to give back to people who don't.
Yeah, Jason, grateful for how you've given back to us today, and thinking through what's a great opportunity, what's a good deal, what's not, and how you look at that. Even many details of how you find those projects, mom and pop owners, and I mean your team, through your team calling, but also mismarketed deals, and the making the offers on projects maybe that's been on the market for a while. But then, so I mean, even the relationships that you laid out, that hey, go focus on these people because they're connected to sellers. I thought really good advice, because I bet there's people that are saying, I can't find a deal, but they haven't gone and tried these things, right? Or done this and built those relationships that you helped us to think through today. Jason, how can the listeners get in touch with you and learn more about you?
Yeah, thank you so much for having me, Whitney. It was a pleasure. And easiest way to connect with me is either my Instagram or YouTube. Both handles are Jason Joseph Lee, my full name. And yeah, you can find me there if you have any questions, and happy to help you out.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.